After weeks and weeks of outperforming, well, in the last week, the couch investing portfolio was down 2.78% compared to the S&P 500, which was down 2.16%. Now, since we started this portfolio, the portfolio is up 60.4%, while the S&P 500 is up 19% in that same period. Now, as you can also see, it's quite clear when I started to outperform and outperform by quite a lot. It happened in the last month and a half. It took a long time until these positions actually started to move on the way up. And I know some of you might say, oh, but that's because you got lucky. Look at the positions that you own. Well, maybe I did get lucky with some of the positions. Maybe I did get lucky with the timing. And maybe, yes, it's true that some of these names have gone up way too quickly in a short period of time. Yeah, that might be true. But I was also underperforming for quite a long time. And I've seen people say, oh, you're wrong about this position, you're wrong about that position. And I'm not going to lie to you. Sometimes I thought, and not just this year, in the past couple of years since I've started investing, yes, sometimes you start to think, maybe I am wrong because the company, the stock is not moving on the way up. The market is moving on the way up. The business is doing quite well. So why the heck is the stock not moving up? And yes, maybe at that time I was saying, maybe I'm just unlucky. Yeah, that might also be true. So the topic of this video is going to be about, being lucky, being right, and being sometimes unlucky as well. And then a short overview of what's been happening here in the portfolio in the last couple of days. And since this is almost the end of 2024, let's maybe talk about what's going to happen in 2025. If you enjoy this type of videos, hit all the buttons. There are some codes and links down there if you want to use it. 20% off this website, 20% off that website. Would really appreciate that. So let's continue. First of all, I do want to repeat myself again and again. For those of you that are new here, I have no capital gains taxes, so I have the luxury of going in and out of a position and not thinking about the tax implications. I am getting taxed quite a lot on my income and on dividends. Luckily, strangely enough, the dividend plays that I have right now are Meta and Google, which is funny because I never thought that those would be dividend paying stocks, at least not in the near term. Anyways, with that out of the way, let's again switch back to the main topic of this video. Did you get lucky? Did you not get lucky? And sometimes, are you wrong? Yes, all of them. The answer is yes. I've been lucky because, the timing has been quite well. I bought a lot of the stocks that I own in this portfolio at the correct time, it seems, right? At the start of this year, a lot of stocks were quite lower than where they are today. Now, actually, they've been at those prices for quite a long time, right? We've been talking about SoFi for a long time, and the price was always around $7, $8, $9. Switching to PayPal. PayPal has been underperforming for a long period of time, right? So the price was always $60, $70 around those prices. So maybe the timing there was quite good. Same with Tesla, same with Palantir. With Google, it's been ups and downs, but that was because of their own mistakes. But then again, the core business is quite good, and that's why Google right now is actually the number 3 position in the portfolio if you remove cash. Yes, cash is at 17.19% at the moment. Now, as you also know, if you've been following this channel and this portfolio since the start, you know that it did not always look like this. There were some companies that came in and that came out. Some trades, especially the last one, for example, Micron, I did sell out of my position completely. Why is that? Well, it was basically a trade. It didn't work out. And to be honest, yes, I could have kept Micron in the portfolio because, the stock did take quite a hit. I took a 11.85% loss on that failed trade. But I could have very easily just kept it in the portfolio, wait another 2 quarters or so, and see if it does work out. Because I do think that Micron is a very good position, well positioned for the future as well. Just some short-term headwinds. But I have to stick to the strategy. If I say that it's going to be a short-term trade, an earnings trade, then I have to stick to that strategy. Because if I start thinking about, oh, what might some people say when I do this and that, I'll be making a lot of mistakes in the future. I said this was a trade, so it's a trade. I sold, I took my loss, and I move on. Yeah, can be that it's a mistake. I've made that mistake previously as well. Same with Robinhood. I bought Robinhood at $16 or something like that. Earnings trade, I sold the next day or the next day and a half after that. It went up by 10-12% or so, and I was happy. Well, we all know what happened next. The stock more than doubled along the way. So yeah, maybe that was a mistake, but then again, that money probably went into Tesla or Palantir or SoFi or whatnot. So those stocks have gone up. But I have a plan and I have to stick to that plan. And I think everybody has to stick to their own plans as well, since you're talking about your portfolio and your money. The only person you need to impress is yourself. Because at the end of the day, what do you want? Do you want to impress people with your portfolio or the stocks that you're buying and the story that you're telling yourself and your friends? Or at the end of the day, do you want to retire early because, well, your performance has actually been quite well and you've made a ton of money along the way? I think scenario 2 is the correct answer, right? And that's the thing here. At the start, maybe I did too many changes in the portfolio, right? I was thinking about, oh, can I make this interesting? Maybe that company is interesting. Maybe that company is interesting. Maybe I have to talk about that. Maybe this, maybe that. But it didn't make any sense to me. It didn't make any sense to me. And so, yes, for a long, long period of time, the portfolio basically consisted of, well, SoFi, PayPal, Google, Tesla. Yes, Intel has been dragging the portfolio down a little bit, but Palantir was there as well. And yes, these were the top 4, top 5 positions in the portfolio. The portfolio has been underperforming for a long, long period of time because those were the core holdings. Yes, there are 16 positions here, but the top positions make up the, let's say, large chunk of the portfolio. And so I decided to just continue with my strategy. And yes, for a long period of time, every single episode was, we've been underperforming, the stock is down, the portfolio is down, etc., etc. Has been painful, but look at where we are right now. We're up 60%. We're up 60% in less than a year. I mean, I know some people are up 100%, 200% this year. That's great. But if we are thinking about beating the market, I think 60% is already quite a good start, don't you think? Now, of course, if next year I'm down 20, 40% or whatnot, then I haven't done really a lot, right? That's why my cash position has now increased to 17%. Because going into 2025, I want to be careful, right? Things are at all-time highs. A lot of companies, a lot of stocks have valuations that don't make any sense. I've explained why I sold Palantir, and Palantir continued to go up 10, 15% or so even after I sold. That's great for those of you that hold. For me personally, it did not make sense anymore. Hopefully I can enter Palantir again in the next coming ones, whether it's because the stock has gone down or the business has just accelerated by so much and is expected to grow by so much that it does make sense for me to buy back, and I have no issues buying back at a higher price than what I've sold it for before. The same with the other companies. I've taken profits from SoFi, I've taken profits from Tesla as well. Not as much, although Tesla did take a lot of profits along the way, especially in the last 2-3 weeks or so. That's just me managing the risk in this portfolio. And to be honest, I'm quite happy with that, because even though a lot of folks think that I'm an idiot, oh, you shouldn't have done this, shouldn't have done that, to be honest, I don't care, right? I'm not telling you what to do with your money in your portfolio, so you shouldn't be telling me what I do with my money in my portfolio. If I'm doing these moves and they don't work out, that's on me, not on you, right? You shouldn't be following my moves here. You shouldn't be following anyone's move because it's your money and your portfolio. So whether I buy, I don't know, some stupid company next, that's on me, not on you. Which goes back to what I've done in the last couple of days. As you can see right here, I've added 30 shares to my Uber position and 30% increase. I've increased my Alibaba position by 38.46%. And at the start of the week, I also added 130 shares or increased that position by Intel by 35.14%. And I also decreased my Tesla position by another 10 shares for 158.47% gain. And so this is basically what you're looking at right now. Yes, it does seem like we're going to end the year with cash at number 1, SoFi number 2, PayPal number 3, then Google Alphabet, Tesla, Rocket Lab, that's basically number 6 here because it's up 475%. Then we've got Intel, dLocal, Uber, Alibaba, Meta, Transmedics, Celsius, Pinduoduo, Appcelera, and Owlet. Yes, I know what I said with Transmedics as well. It should have been a short-term play. Short-term for me, meaning less than a year. We'll see what happens at these prices. I do think that it's quite attractive right now. With Celsius, yes, I am holding the bag. I've admitted that before. With Celsius, I'm holding the bag. I'm down 38.5%. Luckily for me, it still is a small position in the portfolio. And like I said previously, I will only add to this position when I see some positive momentum with the stock. And you might think I'm crazy, but I think Intel will outperform in 2025. We'll see. We'll see if I'm correct 12 months from now. But yeah, lots of folks have doubted this portfolio and especially these positions for a long time. And the reason behind it was purely because the stock did not move or actually went down when the market went up. Well, SoFi is now up 104%, PayPal up close to 50%, Google up 23.5%, Tesla 133.6%. My Palantir position was up over 200%, Rocket Lab up 475%. So the big winners here definitely do much better than some of the losers in the portfolio. That's the thing. You cannot have a 100% perfect record. Just have to make sure that your winners win way more than your losers. And yes, it might not always be the fancy schmancy names. You might not always do what everybody thinks you should be doing. But I'll repeat it again and again. It's your portfolio, it's your money. And the only person that will have to live with those decisions is you. Yeah, maybe at first I was too naive and stupid, so I was like, oh, this commenter said I'm dumb, so I have to do this. This commenter said I'm smart, so I have to keep that. No, at the end of the day, it's me. It's my feeling, my gut feeling, my investment thesis. And yes, sometimes I do trade, sometimes it's successful, sometimes it's not. That's it. Going to 2025, we're going to be doing the exact same thing. If I see companies that have gone down and are quite interesting, I will probably add them. If I see that some of the companies in my portfolio are already up quite a lot and valuation does not make any sense anymore, I will take profits and sometimes even close out the position. Sometimes I will increase my cash position because I think, well, the overall market just doesn't make any sense anymore. So securing profits, making sure that my portfolio does not get wrecked anymore, just like in 2022, where, well, we know what happened. So that's about it. Hopefully you learned something. If not, that's also fine. Let me know in the comment section below. Hit all the buttons, like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.